everybody. Welcome to another episode of the David A. Bettis podcast. And we're going to continue today talking about real estate, one of my favorite investments for wealth, but more importantly, my favorite investment for tax strategy. And today we have Jim Clark, a real estate investor, entrepreneur, tax business owner, and strategist, who's going to share with us some of the some of the strategies he's used and how you can benefit from investing in real estate. But more importantly, how real estate is used today as an asset and a tool for the wealthy. And by the way, if you're on here and you're thinking, well, I'm not wealthy, everybody deserves to be wealthy. And so if you watch this, I'm telling you, it's going to share with you some of the insights that some of the most wealthy people today utilize in real estate. So Jim, welcome to the podcast.
Well, thank you, sir.
Awesome,
Good
man.
to be here.
So I'm excited to have you. By the way, you came down here from
Austin,
Texas. I heard that's a really hot market for real estate.
It is, very much so.
Yeah, I don't understand why.
I mean, it hasn't, honestly, I don't think it's cooled down for the last 15 years, quite honestly. It just continues to increase.
Why do you think that is, by the way?
Well, a lot of it is the way the state of Texas has pulled in a lot of businesses. A lot of businesses are moving from other states into Texas. A lot of the businesses wanting to come to Texas end up in Austin area.
Why Austin and not Houston or Dallas or San Antonio?
Well, I mean, Austin is the capital.
Okay.
It is
That's a good point.
Probably a little more progressive, I would think, than some of the other cities. And the Austin area has really, as far as incentives for the companies to come in, pretty much opened up their wallets.
So they do whatever they can, right?
Pretty much so. Pretty much so.
Would you say, just because I know the area, would you say it's the climate as well? Like literally, probably the best weather in Texas is probably in Austin?
Well, I don't know if I'd say the best weather, but I would say it's got a lot of things going on there. I mean, there's a lot of nightlife as well. Of course, everyone knows Austin for their 6th Street and live music.
Austin city limits.
City limits, all the festivals and everything else. Of course, COVID put a little damper on that little hiccup there, but yeah, it's a really nice place. I mean, there's a lot of venues. There's a lot of things to do. It's we have our professional soccer team there.
So just so everybody in the audience knows, what's the slogan for Austin?
Keep Austin weird.
Keep Austin weird. It is a weird city. I mean,
it is different. There's no doubt. No doubt.
Interesting. So tell us about you. What do you do today?
I try to do nothing.
Well, but that's good, right? That's a good plan.
My wife and I are owners of Liberty Tax franchise. We also do insurance, and we do real estate investing as well.
Awesome. So tell me about the real estate investing. What do you guys do in real estate?
Well, it used to be where you would go in and analyze, the properties and everything else, to where that you didn't want to lose money on a deal, quite honestly. Nowadays, you pretty much, when you go in to buy a property, you're bidding against maybe 15, 20, 30 other people, and so at that particular point, if you're willing to buy it for whatever the price, and that's pretty much what it is, then you buy the property, and then you end up listing the property, doing what you need to do to make the property look good, figure out if you're going to keep it or if you're going to flip it and turn it. And because the Austin market, even though it has slowed down, when I say slowed down, it used to be when you'd list a property in Austin, there would be not just one offer or two offers, there were like 20 or 30 offers.
I can see that.
And well above the asking price typically, so it basically was a bidding war, so to speak. But now it's cooled off a little bit, so instead of having 20, 30, 40 offers on day one, you might have 20 or 30 offers by day 5 and have it sold by then.
Yeah, gotcha.
But it's still moving.
Okay, and you're an investor in Austin?
Yes.
Okay, what do you invest in?
We look at, mainly we look at the the single family homes, duplexes, fourplexes, small apartment complexes.
Okay, and so why did you get into real estate?
It's kind of like you're told or you're taught certain things in life, and then as you get older, maybe not wiser, but as you get older, you kind of figure out that some of these things don't necessarily add up. And so you start looking for other things. And when I started looking for other things, my wife and I found, went back and looked, read, real estate is a very, very sound investment. Yes, it's going to have possibly its hiccups where, the values may go up, values may go down. Like I said, in Austin, we haven't seen that really go down in the last 15 years. And so we figured out that that would be a great mechanism for retirement, quite honestly.
Okay.
So instead of having a 401k or an IRA, we're doing and putting our money in that direction.
So when you got into real estate, knowing what you know now, did you think about it from a tax standpoint at first?
No.
And when did it click to you that taxes and real estate go really well together?
Well, when we got into the real estate side of it, we joined a couple of real estate investment groups that are in Austin.
Okay.
And of course, we were, looking for the we need to make money, kind of deal. Which is what everyone wants to do. Yeah.
Oh, man, golly. Okay.
And then we did a few deals, and then we realized, it's like, hey, maybe I need to do something else. And so then that's when we bought into the tax franchise. Or when we bought into the tax franchise, that's when I really started digging into the benefits, plus the real estate group that we had invested in and became a part of there in the Austin area had trainings and teachings and education to where it's like, oh, it's not just to make $50, $60, $100,000 on a deal. You can actually make that money and actually keep that money.
Heck yeah. It's funny, the one thing that everybody says when they look for real estate is, how much money can I make in cash flow?
Sure.
Like that's the number one thing. And I'm not against that, because that's how I used to think. When I got into real estate many years ago, I'm like, how much money can I make? And then I realized it's so small that I still had to work. Well, unless you can live really small.
Yeah.
I was talking to a guy recently, and I referenced this in our other podcast. The guy that came to me who had 70 rental properties, and that's all he had. But he was a very frugal guy, I could tell. So I could tell that when he got into real estate, he did all the maintenance, he did all the repairs, he did all of the work, he did everything, and he had a very minimalist lifestyle. And even today, after 70 properties, he still lives very minimalist. I can tell just by talking to him, right? So the reason he has to do that, though, is because he didn't, and maybe he does today, but he didn't have a lot of cash, right? But he didn't pay taxes either. So he's living good, but he's not living good. So you got into real estate, got into the tax industry, started joining groups, understanding the mechanisms that work towards tax planning with real estate. And today you advise people on this, right? You're like, hey,
correct,
I help you figure this out. So what are some of the things you tell your clients when they want to get into real estate if they haven't done it before?
I tell them that, yes, you can make money. I don't lie to them about it. I also tell them that you can lose your ass too.
Yep.
And that is probably one of the biggest fears that they have. But with the Austin market being the way it is, you have to be a real dummy to not make money, quite honestly. So it is that kind of that false security, so to speak. But yeah, I have a frank conversation with them and say, look, yes, it is a great mechanism for wealth building. It's a great mechanism for cash flow. It's a great mechanism for building your bank account up nicely. But you also have to understand that the government is going to want a big piece of your pie unless you figure out how to do it properly.
What does wealth mean to you? Because you say that to your clients, wealth strategy. What does wealth mean to you?
Well, to me, wealth is just, it really is a tool. It's a mechanism to be able to obtain the things that you want. And it's kind of like what you were saying. When you first start off, it's like me and my wife, when we first got married, we didn't have no money. Okay, literally, we had no, and we had our jobs, but our jobs, we were basically, if we were lucky, we were living paycheck to paycheck.
Yep.
It's like, you know, as you get closer to the 15th or the 30th of the month, you kind of figure out, okay, I ain't got no money, so which one am I not going to pay of these bills? And we're going to let that roll over to next month, you know, that kind of deal. And then finally you figure out how to start making it to where you have enough money to live, and then all of a sudden you have a little extra money. And then you start thinking about, okay, well, what can I do beyond just spending this money? And then that's when you start looking for other opportunities. And real estate was one of those opportunities that kind of slapped us in the face, so to speak.
Yeah, well, we got, you know, so it's interesting that you say that, because I think real estate has an allure not only because of the cash flow, but they're just like, it's easier to understand than, let's say, the stock market. Because
very much so.
I mean, well, the reason so over the last 3 or 4 years, I put quite a bit of money in the market, and you know, some I won, some I lost, but I constantly found myself like having to watch things and learn things. Like I had to, you know, I'd watch the news, or not necessarily just the news, but like, you know, financial news, and I'd look at, you know, quarterly reports, and I'd look at CPI data, and I would look, you know, and I would look at things just so I could be informed enough to get my money out in case the world fell to shit, which it did recently. But what I'm getting at is real estate. You don't necessarily have to be, because this is calling myself out, you don't have to be that bright, no. Right? You just have to have a few knowledge points, you know, market, just a little understanding of the market, a little bit of understanding about how markets price properties, and then know if you're getting a good deal or not, and how much you can rent or sell it for, right? That's it.
That, and I also think, honestly, because when we got into it, you know, we paid a pretty good penny to get into one of our real estate investment groups, and it was just not just, you know, the amount of money that you paid to, you know, to say, hey, I'm a member, but they actually, you know, had trainings and everything. And, you know, like with anything else in life, there's some good people in the real estate group, and there's some people that are like, you know, a little shady, but you kind of figure that out as you go. I mean that's anywhere in life. But we were very fortunate to have a couple of mentors that basically took us under the wing and said, we'll show you how to do it.
Interesting.
We'll open our book, their playbook, so to speak, and say, okay, this is how we've done it. Even today, they still will, whenever they're doing a property, they'll have a meeting and say, okay, we're going to show you all the numbers. We're going to tell you exactly what we did and why we did what we did, and then have a meeting, so to speak, like a mastermind group, to sit there and go, okay, what would you have done differently, or would you have done anything differently?
That's pretty cool.
And it was very cool to the sense that, you know, it's kind of like in school. Whenever you want to become a tax professional, there are no schools for tax professionals until you get into the profession and realize, oh, you have to teach your own tax school. You have to actually learn all that stuff.
Or you got to read your own books, or find some resource, or learn from somebody.
Learn from someone. And with the real estate investing, it was kind of the same way. And a lot of the investors, of course, you know, they don't want to give their trade secrets away, so to speak. But these people that we became very good friends with were very honest, very straightforward, and their attitude was, there's enough real estate to go around.
I like that. So do these investor mentors, did they teach you about the tax strategies?
They started teaching us about the tax strategies, and that's kind of where I started thinking about, you know, beyond, okay, we're going to do the real estate investing, beyond that, what else can we do? And then we were looking for then all those opportunities, and the franchise with the tax side came into play.
Interesting. Okay, so I've heard this story from another person as well. They got into real estate, and then they were like, hey, taxes make sense. So, so today, what kind of benefits do you see the most with real estate investing and taxes?
I would say that the biggest one is the cash flow side of it, to be honest with you.
Okay.
And when I say cash flow, you know, yeah, let's say, for example, you have a single-family residence and you're renting it out. You're going to have the income from that, but you're also going to have all of the expenses. Because most people, You know, you don't pay cash up front for a $200,000, $300,000 piece of property.
You put a down payment.
You put a down payment, and you finance the rest. So you have a mortgage just like anyone else.
Correct.
And so all those expenses go then on that balance sheet, and you come up, typically, if you're doing it right, you're going to come up with a little bit of a cash flow out of it.
A little bit, most
a little
cases.
bit.
And so how does that benefit you in your taxes?
So you have, you know, maybe $300,000-$400,000 if you're really, you know, good at it, as far as a monthly cash flow is concerned. But then here comes this little thing called depreciation. Well, depreciation is something that is allowed. It's something that you're able to then take back a portion of that sales price, what you paid for it as far as the improvement was concerned, over a certain time period. And so it's like free money. You know, for example, your $300,000 home, if it was just the improvement, no land, because you can't depreciate land, but that $300,000 home, you know, you're looking at over a 27-year period, you know, $10,000, $11,000 in depreciation.
Just depreciation.
Just
that's
depreciation.
Not, that's a deduction.
That's a deduction.
All against your income.
So let's say you're making $1,000
a month
off of everything else but depreciation, then all of a sudden, bam, you have $11,000 depreciation expenses, so you now have lost $10,000.
Heck yeah.
When in reality, you haven't lost.
You haven't lost any money, but it's paper loss.
It's a paper loss, and that paper loss then transfers over to your tax return, and thus reduces your taxable income, and so you're paying less in taxes.
You know, this is case in point, and I like to use this because, or I'd like to use this as an example because, you know, our former president, Donald Trump, regardless if you like the guy or you don't, that's the strategy he used, but at a higher level.
Yeah.
And actually, he's not the only one. Like, that's the only reason that I'm using him is because we heard this mantra for a few years: show your tax returns.
Sure.
And I don't know if he ever did or didn't. I didn't pay attention, but I knew what he was doing because if you know the strategy, what he would do is he would go buy a $100 million piece of property. I mean, that's a big number.
Yeah.
Then he'd depreciate that thing, which is legal, which is what the government and the tax. I mean, actually, if people don't like what he did or anybody did, it's not his fault. It's not anybody's fault. It's Congress. It's our ability to vote to have those things happen, right? He's playing the game,
and everyone knows Donald Trump because everyone loves to hate the man. I mean, you either, I mean, even if you like the guy, there are things that he does that you're going to go, oh crap, I hate that. You know, but he is a very smart businessman, and yes, he's not the only one. But everyone says, "Oh, Donald Trump," you know. But there are other.
Well, all billionaires do it. Every billionaire, Jeff Bezos, Steve Jobs, Elon Musk, all of them don't pay taxes, that's a lie, right? So. I only want to point this out because we're in the tax industry. They do pay taxes. It's just different types of taxes. They pay real estate taxes, sales taxes, use taxes, employment. So there's tremendous amounts of money that are paid in taxes, capital gains taxes. Mm-hmm. The difference is that they sometimes don't pay exactly what they would have paid because they have ways to lower their tax liability. Right. But that's every American can do this, right?
And that's the beauty of it. Every American has the opportunity to do that, but most of us, honestly, are a little lazy. They don't want to find someone or don't want to research it themselves because that is an opportunity for everyone to be able to take it.
Interesting thing that you say that. So let's go to that because you're saying that, and I kind of see the laziness, but do you think that people who blame people, like, so there's this big blame game. Like, when people don't pay taxes, they're just like, you're cheating, you should pay more taxes, you should get, you make more money, so you should pay taxes. You know, in the world that we live in, from a tax strategy, tax planning, helping our clients, I mean, I truly believe people should pay taxes. Do you think that every American should be looking for ways to not pay taxes every single day?
Absolutely.
And why don't they?
Honestly, I think that they are a little lazy, and they're also afraid that, oh, well, this has got to, it's the old adage, if it's too good to be true, then it's probably not. But in reality, when you look at the tax code, it's there. It's incentives that the federal government have allowed for us to do certain things, whether it be invest in real estate, invest in a business, invest in different energy, oil. Solar is another big one that right now that the government is pushing. So If you're smart, you take it, not advantage, but you take that opportunity.
No, you take advantage. That's the truth, isn't it? I mean,
well, it's, you know, whenever you say take advantage, it sounds like you're taking something that you shouldn't have, but in reality, it's there for the taking, and it's everyone's opportunity to take.
I would say when this actually just came to me, right? And we'll use this as an analogy. There are companies out there that want to promote a particular product. Let's say it's a soap or a toothpaste or a particular brand of cleaning chemicals, something like that, because those are the most common. And they put advertisements out with coupons. And the coupon says, get $3 off if you buy this, right?
Absolutely.
And some people use them,
Yeah.
and some people don't.
Correct.
So the people who don't, it's not necessarily that they didn't know that a coupon existed. They just don't choose to use the coupon because, I mean, there is laziness. There's a time that takes to be able to go get the coupon.
Sure.
There's a convenience factor. So, I mean, the people who aren't using the coupon doesn't mean they're stupid. It just means that they just have not decided that the coupon is worth going to get.
Sure.
And so I look at it now and I'm like, crap, you know, how many people are leaving tax dollars in the hands of the IRS that then turns around and gives it to our Congress, that then turns around and gives it to somebody that probably, to be truthful, doesn't deserve it. And that's what we're doing today, right?
Sure.
And our job as tax strategists, you and I, because that's what you do and I do, is to help people avoid those common mistakes. Now, can we help everybody? Can you help everybody save money on taxes, truthfully?
Honestly, I would say no, because there are a certain segment of people that, I mean, let's face it, the tax code does not necessarily incentivize them, especially in the business side. I mean, if you're a business owner, if you're investing in real estate, investing in energy, oil, solar, gas, things of that nature, there are a lot of incentives that the government gives us. And when I say gives us, it's in the tax code, so it's not like you're cheating or anything.
Nope.
But there are other things, incentives. I mean, if, you know, for example, if you have a single family with a couple of kids, you have incentives as far as the benefits of the children. Now, those benefits and those credits that are given on your tax return for the kids definitely far do not outweigh the fact that of the expenses of those kids. Okay, so because I have had a couple of clients going, you know, they look at their return and they're going, "Damn, I'm only getting $1,000. Maybe I should have a couple of kids." You know, and they look at me. Well, what would a couple of kids do to my return? And I said, well, you're probably looking at another $7,000 or $8,000 in a return. And I go, well, let me go. I want to go have some kids.
Have some kids.
And I'm going, you do understand that those kids are more expensive than the $4,000 or $5,000 credit that you're going to be getting.
Yeah, that's a good statement, right? That's a good a sound bite, right? Having more kids gets you a bigger refund, right? But it doesn't save you any money.
No, it does not.
That's
kids,
so true.
Kids are expensive.
Now,
I mean,
so what a real strategist would say, okay, look, if you're going to get a $3,000 child tax credit, make sure you don't spend more than $3,000 on this kid this year.
Good luck.
Could you do that, right?
Good luck.
Yeah, good luck with that, right? So we've gone a little bit in different ways, but we just know that there is a huge advantage for real estate investors or people who want to get into real estate. So I guess signing us off here, if somebody was thinking today, they watched this and they thought, okay, I'm sold. I want to be in real estate, or at least think about it, and I'm thinking about doing it because there's some tax advantages to doing it, right? Where do you recommend they start?
I would say go to your local, get on Google for real estate investment groups in your local area. Do not bring your wallet. Go there.
Don't take your wallet.
Don't take your wallet. Because I'll be honest with you, the reason those investment groups are there is to bring in more people, and then that membership or that teaching that they're going to give you, if they are really good investment groups,
it costs money.
It costs money. Okay, but go to those meetings. Go to several meetings before you figure out that you want to go buy a property. And God gave us one mouth and 2 ears for a reason. So close your mouth.
Shut up.
Open your ears and mingle with all those people, and you'll find really good people that are willing to explain all the ins and outs, the ups and the pitfalls of real estate investing. And then whenever you are educated enough, not that there's ever such a thing, but when you feel like you're educated enough, then that's when you can start that
make
process.
a decision.
Yeah.
Good.
And the other thing I would say is this, okay, and it's a hard concept to kind of get across, but the sooner that we can, the better off we're going to be, is that it's okay to partner. For example, if I was brand new and you were a real estate investor and I thought I had a deal, it would be great if I partnered with you and we split the deal. Because if you're willing to help me and teach me, then we're going to be able to make a deal work. You're going to get 50%, I'm going to get 50%. But the problem is that when we go into it, typically we want 100%.
Well, I mean, this could be a whole another episode all in itself. I would tell you that the biggest challenge I've seen in that world of partnerships, just so the audience knows, and I'm not saying that you said anything wrong, I would just say it this way. When you go into a deal, know what your role is.
Yes.
If you're an investor, then be an investor. If you're and there's different types of investors. There's a cash money investor, and then there's an active investor, which means somebody does the deal and works on the deal, and then somebody invests in the deal. If you truly want to be a real estate investor and you really love the hands-on, I want to get dirty, work on things, a partnership may not work for you.
True.
Because just giving you a disclaimer, because you will be very frustrated because you don't get to really make a lot of decisions when you go into partnerships. You have to make joint decisions. You've got to figure things out together, right? So I like real estate in two ways. Like truthfully, if I could just be a passive investor and not actually handle the deals, I would probably do more of that. But I find that most of the time I'm a very good active investor. So only because I know deals and I know structure and I know what to find and I know what to look for and I know what needs repair, so I'm good at that. So I've been blessed and with that ability, so I'm good at that. But if I could find more passive activities, I would, because it's truly, real estate investing sucks when you have to manage a project.
Sure.
It sucks.
It can be time consuming.
It is, especially if you have a real source of income, which is your work or your business. That's when it becomes really crappy. But, I'm blessed. I have a wife and some people that work with us to do it. So when you're blessed, you have the luxury of time. So for everybody watching, how can they get a hold of you, Jim?
I'm in Austin. You can give us a call on our office line.
Go for it.
512-271-6606. Or you can email us.
I'll put all both of those things down in the comments
as well. So
great, Jim. Well, thank you. And if you guys are out there watching this episode and you're wondering more about real estate investing and strategy, we're going to host a lot more of these kind of episodes, because this is the one question I get asked the most: how do I get into real estate and how do I save money on my taxes? These are actually the two questions. And when I think about those two things, I'm always trying to figure out how to make it easier for the people watching to do it, because one of the biggest challenges that we get as people, we get this paralysis analysis, where we try to take in all this information and then we need more and we get more questions. Well, we're going to be able to give you a lot more insights so that when you make a decision, you feel like you're confident enough to do it. And all this stuff is just for informational purposes only, just so you know. You should never make a real estate or any investment without actually consulting with somebody who's an experienced investor that you trust. And I'll tell you, you should never make an investment activity that doesn't produce revenue or income, that has positive against expenses. So just disclaimers. Thank you guys for watching. I'll see you on the next episode.